Hey Big Bulls, we are back again and it's an IPO mailer of an episode today. We're talking about three big news items. Mobikwik's IPO frenzy, Vishal's Mega Mart IPO, and why penny stock Mishtann Foods came under Sebi's radar. And as you can see, it's just me here today and this is not investment advice. So let's dive in. The demand for Mobikwik's IPO has been like the demand for Coldplay concert tickets. The IPO opened for subscription yesterday and within 90 minutes it was fully subscribed. Investors lapped up all the tickets. Shares on offer. So, why the frenzy? Okay, think about what Mobikwik does. It started as one of those platforms making mobile recharges easy, but that's ancient history now. It's a full-fledged fintech with mobile wallets to pay all sorts of bills, shop and even take loans, make investments into mutual funds, get insurance, everything. It's a fintech super app with over 16 crore users on one side of the coin and 50 lakh merchants on the other side. Now, Paytm does this too, and we know Paytm has struggled massively since it IPO'd. So shouldn't investors be concerned? Okay, the difference here is that Mobikwik has managed to beat that dreaded fintech curse of loss-making companies. It reported a profit of 14 crore rupees in FY24 on revenues of 875 crores. And brokerages say that's a good thing, that the company is making a healthy margin too, unlike Paytm. Its payment, gross merchandise value or GMV, has grown at 46% annually in the past 3 years, and Mobikwik Zip, which houses its flagship offerings such as a 30-day credit line and personal loans, has grown its GMV by 112% annually too. A look at these key numbers doesn't make it look too shabby, right? And the kicker is also that it's doing all this by keeping the cost of customer acquisition or CAC below Rs 33 per new user in FY24. And brokerages pointed out that it's not something Paytm has been consistent with. So combine that with a reasonable valuation it is asking for in the IPO and you can see why people are rushing to lap it up. But do keep a couple of things in mind. For starters, it reported losses in the first quarter of FY25. So it only has one full profitable year and there's no guarantee that the profits will show up as the company battles competition and tries to grow. Secondly, the company is not as highly valued as it once was. In 2021, it held a private valuation of nearly $1 billion. Now it's a quarter of that. And you don't see that significant drop very often. So you have to wonder what is something amiss. But hey, maybe the Rs 500 crores that it's raising from the IPO, which ends tomorrow on the 13th of December, will help it cement its fintech dominance. We'll have to wait and see. Moving on from one IPO to the next, let's talk about Vishal's Mega Mart IPO, India's largest fashion-led hypermarket chain. That's how everyone's describing this 23-year-old company that is just wrapping up a proper mega IPO worth 8,000 crore rupees today. It didn't get the sort of frenzied subscriptions that Mobikwik did, but it managed to get across the line. So, what does Vishal Mega Mart really do? Okay, its strategy is quite clear-cut. It targets India's lower middle income and middle income folks and sells them apparel, FMCG products, and some general merchandise such as kettles, fans, and other odds and ends you need in the house. Today, its apparel business accounts for 45% of its business, 28% comes from FMCG, and general merchandise contributes to 27% of the top line. And overall, the brand has now 645 stores, out of which 450 are in Tier 2 cities and beyond. Put together, it covers over 11 million square feet of retail space, and some say it's the third largest offline-led retailer in the country now. So, why was the demand for its IPO slightly muted when compared to Mobikwik? Well, both are completely different plays, of course, but one other reason could be that the space Vishal's operating in right now is not very hot. You might have seen people likening it to D-Mart, right? D-Mart's a similar sort of play, and D-Mart's once high-flying stock has dropped 20% in the past 6 months. Now, that's because of primarily two reasons. There's a slowdown in consumer spending in India, which is hurting these retailers. People are tightening their purse strings. And on the other hand, there's the big threat of quick commerce. Yeah. Folks like Blinkit, Swiggy, Instamart, and Zepto are in the mix, and according to a Nielsen IQ report, 31% of shoppers are turning to quick commerce for their essential purchases. And that number is even higher for impulse buys. So if you were a betting man, you'd bet that footfalls at physical stores like Vishal are going to drop even further in the future. So maybe that's something weighing on the minds of prospective investors. But we do have to point out that Vishal's not being a slouch about it. Last year, Vishal Mega Mart launched a pilot in quick commerce, letting users access inventory from nearby stores within an 8 to 10 kilometer radius through an app. So it definitely realizes the threat. And this is now available in many cities across India. So you'd expect them to double down from here. Also, it is betting big on its own in-house brands. It gets a third party to manufacture stuff, slaps its own labels on it. 19 of its brands have hit sales of over rupees 100 crores each, and together they account for nearly 73% of the company's revenue now. And this part of the business is growing at 28% every year. So maybe that will help counter the quick commerce threat. The other niggling worry for investors might be that the company is offloading its shares in an offer for sale. There's no fresh money being raised despite the massive 8,000 crore rupee IPO. But let me give you the backdrop to that as well, because there might be a simple explanation. See, back in the early 2000s, Vishal Mega Mart ran into a speed bump, a big one. The expansion was too aggressive initially, the company had racked up way too much debt, and the founders had to sell out to the big guys, the private equity players who came in and lapped this up for a dirt cheap price in 2010. Now, these private equity players managed to do a mega turnaround of the company's fortunes and then cashed out by selling it to other PE investors. A game of PE musical chairs. So now, after 6 years of running the show and owning nearly 100% of the company, these PE investors want to see their share of profits too. So they're selling some of their shares to make some money. And even after all this, do know they're going to hold nearly 75% of the company. So it's not necessarily that big of a bad thing. And if you ask Vishal Mega Mart's CEO, he says, and I quote, "We have rupees 700 crores on our balance sheet, which gives us the financial strength to fund all our growth ambitions. There's virtually no debt." Now, even so, you might want to compare it against other listed peers. And here are some numbers for you to ponder. So, did you apply for the IPO, or is this going to make you think about snapping up the stock when it lists in a few days? Let us know. Moving on from IPOs, let's talk about Mishtann Foods, which has gotten a slap on the wrist. Now, penny stocks, the ones which are priced below 10 rupees, are risky for a reason. They're often the hotbed of scams like the pump and dump. And Mishtann Foods shares, which hit the lower circuit for 3 days this week, came under the spotlight for this very reason. Why? Sebi, the market watchdog, noticed something was off with Mishtann's accounts and slapped a show cause notice, asking for an explanation from the company and its management. Sebi said the company was involved in something called circular trading with fake buyers and suppliers, many of whom were linked to its directors. Now, this involves a broker buying and selling the same shares at the same price. That's circular trading. And this tricks the market into thinking there's more activity than there really is. And these fake transactions inflated the company's financials, misleading investors and regulators. Now, Sebi got complaints about Mishtann's GST, and they checked its finances from April 2017 to March 2024. They had BSE do surprise visits to the office, factory and suppliers, but they found most weren't at their registered addresses. And that's how Mishtann, which actually makes basmati rice and wheat, has been accused of fake transactions with non-existing businesses, often linked to promoters and their families. They also pointed out that there's a huge rise in public shareholders from 516 in FY18 to 4.23 lakh just last month. Meanwhile, their only promoters sold shares worth 50 crores in the last quarter. This ongoing drop in promoter holdings raised red flags. And with all these allegations, the regulator has now banned Mishtann Foods, its promoter, and its CMD from the securities market over claims of financial mismanagement and fraud. The company now has 21 days to build a case and avoid serious consequences. But remember, these things are quite often happening in the penny stock space. So that's it, folks, from us this week from Bullseye. We hope to see you again with a brand new episode next Thursday. Don't forget to hit that subscribe button and hit that bell icon too, so you know when the next episode drops. And hopefully next week, we'll have the two of us back again running the show. See you next time.